When you're looking at investments, it's easy to find something that you want to own that you could have purchased at a much cheaper price. And your friends are buying it, or your coworkers are buying it, they're talking about it, and they already own it. And you're saying, I should have, I would have, I could have, if only I'd have. Well, there's all sorts of ways to say I got left out, and that has created the fear of missing out, or what's referred to as FOMO. And fear not, you will experience this repeatedly in your investing lifetime. My name's Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
So before we started the recording, we were chatting about Bitcoin and one of the many companies that now invest in Bitcoin, not all of which have been around very long. I mean, today you can buy Bitcoin through exchange traded funds. I haven't looked. There's probably mutual funds that are doing this. They would be late to the game.
Yep.
But prior to that, there were companies that were accumulating Bitcoin for those who did not have the technology, the confidence to go buy Bitcoin on a currency exchange.
Right.
And as we were chatting about this, I said, I talk with people fairly frequently who can't figure out how to open up an online stock account at Schwab or
Right.
Fidelity. They certainly were not going to be early investors in Bitcoin, having to master that technology. So
Correct.
one
And
of the
you had plenty of stories about people that bought Bitcoin and then put it on a flash drive and then lost the flash drive, and that's gone. You know, it's just gone now, unless you can find it. So there were some built-in hazards.
I'd forgotten about that, but if you lost your code, you couldn't act. There's no way to get it back.
Your password's gone, your money's gone. Yeah, you can't access again. So it was.
So your lost shares of Bitcoin are floating somewhere around on the Ethernet, never to be used again. But let's go back to the accumulators. One of those was MicroStrategy. Now, MicroStrategy has renamed itself. It's just called Strategy. But it didn't start out as a Bitcoin company. It started out as a software company in 1999. And along with other companies in the tech bubble, its price went parabolic. And
Sure.
it came back down almost as rapidly as it went up. So it didn't come down a ski slope. It went over the cliff.
There you go.
But it survived. That's one of the exceptions to the tech bubble in 2000 is MicroStrategy actually survived. And it traded 10 to 20 bucks for almost 2 decades. And then last year, it ramped up with Bitcoin, changed what it was actually doing, and traded between $100 and $200. So if you wanted a volatile stock, it was one that would get it.
That'll do it for you. Yep.
But it traded in that $100 to $200 range for almost a year, and then last fourth quarter, it broke out of that, broke above the $180 kind of resistance level, and started trading hard. Actually, went over $500 in just a few months. And you're sitting there saying, I missed it. Now I'm fortunate. As we're talking about this, I went back and pulled the chart up, and I bought it at $190. Now I posted when I entered it. I didn't happen to post when I exited, so I don't know exactly, but I got out in the high threes or the low fours. I mean, that was a nice trade in a couple of months. But you look at it now, and it traded sideways in a big range for this last year, and it's now back below $200. So you're saying, I missed it, yes, but time has passed, and as it happens to apply to our hurt feelings, time heals all wounds.
Right.
whether it's emotional or physical, time also happens to heal a lot of the fear of missing out because prices come back to their level. They revert to the mean, they back to the average price. That's the technical terminology for it.
Doing it. So important now. You just said it. It's so important. That's an emotional response to a loss or a gain that should have been more. And if you're going to be in the market, if you're going to be buying and selling stuff, it doesn't matter if you're short term, mid term, or longer term trader. It doesn't matter if you're trading stocks or you're trading exclusively funds of some kind. You're never going to buy at the low and sell at the high. You're never going to buy at exactly the right time. You're never going to sell at exactly the right time. You need to get used to that. That's the way it's going to work. And if you ever do get even close to that, it's going to be pure luck, not because you planned it that way, because the market does not care one bit about our plans. And you need to get used to that feeling of, wow, I left some money on the table. I should have waited to sell that. Or I should have sold that last week instead of this week. That happens all the time. And it's always a matter of, well, it's still a good trade. It's still a good decision. And don't let not making a perfect call paralyze you into not moving on something that you should be doing, because that's what happens. That fear of missing out can just freeze your brain. And all of a sudden you can't make a decision. You can't buy what you should. You can't sell it when you should. And you're always just doing the best you can with incomplete information. And that's the key. Nobody's got that complete information till after the fact. And that's when you know, oh, that was the peak. And you never know that till it's done. And so you need to keep moving on. Just keep in your head, you're not in this to be perfect. No one's perfect in this game. No one ever has been. And so you need to just keep moving. There's another good trade coming. There's going to be more out there. You didn't just miss the last good trade you're ever going to see. And don't let not being perfect on the last trade mess up getting in on the next one. And that's what tends to happen to people. It's important to clear your mind, move ahead, and hit every trade with an open mind about what you're going to do, and then execute best you can, as close as you can to optimum. And when it's not perfect, that's okay. Move on.
Well, the issue is one of the principles we learned at an academy class that we recently went to. So even when you've been in the business a long time, you still need to pay attention to more training, because the industry changes. And you mentioned that there's another opportunity coming along, and that's certainly true as we are looking at the application of artificial intelligence into the corporate world.
Sure.
So AI has attracted attention on technology stocks, but what people don't understand is AI is going to change the world. This is as innovative a change in the way the world works as was railroad in the United States back in the 1800s, or electrification in the early part of the 1900s. I mean, it changed the world and the way people lived. And this is the same kind of change that is upon us. And we do not understand all the opportunities that are lying ahead for investing. And so it's a function of, I missed that one. Where's the next one? It means that I have to be diligent in continuing to watch the investment universe that I'm participating in,
Correct.
And be ready to make a decision on the next one. And so your point, Perry, that you can't do all these things is limited by you don't have enough capital to do all these things.
Right.
You're going to have more things coming by your doorstep, and you're looking at, as we use charts, you're looking at a chart and say, that looks like a great chart. And then you look at the price and it's $800 a share. You don't have that much in your account. You're going to buy, you're going to buy 2 shares of it? Well, you could, but you're not going to take a significant position in a stock like that. So you're going to end up having to look at something else. Or you're not present at the time that the trade appears to be ideal on your stock chart.
Right. And you mean you've got other things in your life besides that chart? Yeah, exactly. That's what happens. Life happens. And you're not staring at the screen when it's like, oh, I should have sold it 30 minutes ago. And don't worry about it. Just try. Try not to worry about it.
So one of the issues that comes along with investing whether you're well, particularly in individual stocks, is you really have to have some strong discipline as far as your entry points and your exit points. It's a little less demanding if you're using exchange traded funds because they're diversified, and you get rid of you don't get rid of, but you reduce the single stock risk of owning a major position in something that comes out with bad news. I noticed in this morning's news that there was a big problem with the CEO of Campbell's Soup, who had some bad action, bad behavior on social media that had been hidden, that came to light, and it can cause bad damage to your stock portfolio if you have a big concentration in a particular stock with that kind of event. And he's not alone. There have been some others over just the recent months where management has made bad personal decisions that have an adverse impact on the stock. So discipline and process are really important if you're in that arena of individual securities. Having done fundamental research will not protect you from it. You have to understand you're going to be in the game and monitoring it. You can't be sitting on the sidelines and thinking, well, we've got the ball, it'll work out okay. Maybe over time it will, but it may be a long time.
And people love to think that. Once I've taken a position, well, I'm a smart person. I worked hard on this, and this was a great buy. It's going to be okay. Let the market tell you if it's going to be okay or not, and then believe it. That's the thing. And don't let it reflect on you as a trader in the market, you as an investor. Don't let it color, well, I guess I'm not too good at this. And it can really shake your confidence in what you're able to do, and it shouldn't shake it at all. You need to be, like you said, Don, you need to be disciplined in the process that you apply, as close as you can to the same process every time to every trade. That's how you get consistent results. Warren Buffett, famously said the investing is not a game where the trader with an IQ of 160 beats the trader with an IQ of 130 all the time. It doesn't work that way. You have to be tuned to the market, and you have to listen to the market. That's the key. The market's in charge, not you. And you got to let go of that. And that's one of those things that's a little bit tough. When things are moving badly against you, get out of the way. Don't just say, well, no, this is probably going to work out at some point. If it's not working out, it's not working out. And you can spend way too much time trying to figure out why, what happened. Look at that later. First, save the capital. Get out of the way and look for something else. There'll be something else out there to get. That's what you have to do.
You also have to be careful that you do not let your winners move your ego to a point that you're assuming automatically that you're really good at this. This is easy.
Yeah.
That was a common mistake of investors in the late 90s when everything seemed to be going up and you could not make a mistake.
Right.
But then 2001 came along, and a lot of people who thought they were smart and had retired found out that they really needed more than their stock market account because it dissipated very, very quickly. Well, quickly in terms of market. The bear market lasted almost about 2 years and 6 or 9 months. It wasn't a full 3 years, but it unwound massive amounts of wealth because people weren't paying attention and they were married to the idea that the company that they were investing in was a good company and it would be just fine. Well, pets.com is an example of one that didn't work out that way.
Try to find that one today, right?
It's not around. Anyway, if this is interesting to you and you think you have some friends, family, coworkers that would be interested in what we've just covered, feel free to pass the link along to them. If you haven't already done so, subscribe. There's a button on the screen that you can subscribe so you'll be updated when we get the next one out. If you want to talk about your portfolio, you can give us a call. Phone number's on the screen. Send us an email. We'll be glad to chat with you about how we look at positions versus what you're happen to hold in your portfolio. But we're available. It's a free conversation. In the meantime, have a great day. Thanks for being with us.